Welcome to TradeTheMGA.com. This is John. This report is for the 30th of September, so we're ending the month right here for next month's indicators to come out. But interesting reading from our setup here. We had a lower peak than the white, which expresses softness. But what we would be able to see from a build standpoint would be an immediate turnaround. We already have magenta now above yellow. So just to continue lifting back up over this 25 level would certainly project some pretty big potential upside move within that. Now, if we continue to see softness in this, it may take weeks or whatever, but we're already starting now to see a rising zero. So as that begins to climb, that will be the new low area to test with the white peak, but wouldn't take much from a turnaround standpoint. You can see that rising 50% already, and that will become the new draw price-wise, which actually you can see in pre-market they're already pushing towards that 43.92 level. We're at 79, and so the potential for a build to say now, is it exactly set up yet? Not exactly. We do have more bullish tendency here with that magenta over. So also you're seeing a spike in steel rising, orange falling up, orange dips below. Obviously the red you would look for, like we saw here, that much bigger move up, and perfectly in line with expectations. NASDAQ, of course, has been weaker and still maintaining it, so that could be a pull down, and some of this is changings in rotations. A lot of people believe the tech move way outside of its normal ranges has just basically evened out. We filled the dip below the red line, and we're not below the red line at the current stage after the other day. So really the potential for a build, and we can see minus 70. We had a peak of minus 145 on the red MBI, and that usually is the area like it was here before that leads to a push up right through those levels. So in line with that expectation, and again, we'll be watching Treasury yields in this situation where we're looking to see if normal rates amongst real traders are rising. The trouble in the Eurozone, we're back in the inside ranges that I was projecting from, well, way back when we were at our peaks in the 122.3 range. We'd have to shrink that chart quite a ways to see that. There we go. So this puts it back within normalized areas, and really the problem is the desire to buy U.S. dollars right now, particularly ahead of this whole debt ceiling debacle stuff that's developed in the U.S. Whether people actually believe the U.S. would default is a little bizarre, but it happens every few years when they get to these levels and they fight over this and that, and it's all about politics and wrangling. But the Eurozone has got troubles from a forward standpoint in the aspect of this energy crisis that's growing throughout Europe, and whether or not there will be interruptions in that, and that certainly is going to affect economic growth. And the more they talk about it, that even does the same thing. This causes people to freeze, not do anything, or better yet, just get onto the sidelines. You might have expected with the rising inflation gold, some of this is related to the market sell-off and wanting to raise capital. So if you're hedging and you want to convert back into equities, and then you get rid of your commodities so that you're able to do that, and that, in my view, kind of bodes well for push back up for the market as well. And again, watching oil, when they saw the rise in crude inventories also helps. This is still elevated, but hasn't pushed up through. I think once you get past that 55 range, it opens up so much extra supply in that would ease off things. But if you're not using the supply because you've moved to alternative green issues, that doesn't change the energy supply problems that are taking place in a lot of places that are trying to get away from nat gas, petros. From the weak signal on the white spike there when we had the first sell for Bitcoin, that turned around, produced a nice buy setup right here from the NBI, and perfect shoot up right from there, which again also in line with the turnaround move. Here's where the pre-market is. I'm going to look. We had our yellow dots appear until right here. We had a decent buy configuration there as the long algo turned up, and we had buy configurations. Yes, we've got this spike here, but we've been riding with magenta and yellow above that 33 level, and as long as that's maintained, you're still within a buy configuration. Just now we're getting the first hints of a sell. There's a few positive extremes from this run already that will need to be filled. The lowest being right here, which actually in this bar actually saw some action. I think that primarily get right back to similar, close to this 362, and then the ones that began in this run are more likely to get the earliest retrace, which would be right around that 71 range. From an intraday standpoint, we did a lot of beautiful action. This is what I'm working on currently, which would be the adjustment for some of these short setups on the paint bar to begin just a fraction earlier than we've seen in a lot of cases, and that's what these orange dot studies represent, and then the tie-in to the orange dots with the yellow for the turnaround conversion. It's not to say that when you're expecting a move to zero off the divergence, so you get the divergence that took place right at this level, and then you proceed to go outside of it, and usually that can happen anywhere from 8 to 20 points roughly is the normal divergence to the upside, and it's at that point once you start to see the decay that it becomes attractive from the sell signal, and that's what this captures, and sure enough was accurate very nicely going through there. The same thing happened over here. Likewise, a lot of them correspond to existing sell signals, but some of them are quite a bit early. And we have to scroll back quite a ways to the start of the day. We had that nice pre-run up under some positive extremes, filled those back nicely. And then when we got even further into it, we had the spike white below the 50%, and that worked beautifully to coming right back down to zero. And even when you have the white spike but it's below magenta, you're just expecting a continuation upside move until you get your sell signals. And we ended up with a little bit of back and forth on that, but each time we did the back and forth, every pop had the white spike to it, and that was an expectation to that move towards the 0% line. And in this case, the 0% line rose, but ironically, fits pretty well within where the white spike range was from each of these configurations going back there. And so in some ways it acts like a little bit of a positive extreme, except that we're able to utilize it with the Morganachis from that 0% within the expectation of the move to it. And then the yellow dots suggesting that you stay within that broader short scope. And then I got a little choppy in between here, because every time we ended up with a little bit of spike, when you get those big moves, you're expecting that, and particularly below the 50%. This is where it becomes very strong when you see the initial pop of them. I take any pop up within those and look for the short, because my expectation is from a divergence standpoint, typically looking for that 8 to 10 point potential divergence, but I know I'm looking for at least a 6 point or more move to the downside, and are reliable from that standpoint. So definitely worth looking at, and that's part of what putting together within the short setup. I'm going to have to look and see code-wise, and there may have just been too many points moving forward before, but that should have turned green easily with that transition cross above the long algo, and magenta being well over yellow at that particular stage. And Well, this becomes another one, and we can see what that divergence range was. So from 58 to 89. So that was a pretty significant divergence from the right there, but you can see it's beginning to fill back in as soon as it gets that short configuration build in right there. So, all in all, good action. We're looking for a lot more of this. I think that instability of both political situations moving into an October. October's traditionally quite fun, so I think that we're going to be moving around, but at this particular stage, the daily is looking pretty decent. We'll have to take a look at the 50K. Here it is from a 50K viewpoint. We've basically been riding under these solid white spikes. Most of them have filled, and this one has not quite from over here. It's expressed weakness. This is where, when I look at a lot of these, as soon as, if I'm doing them above the 23%, I'm looking for breaks down below 23, and particularly if the long hour goes below that. I like to take a range that's just above it. When I'm doing it on a 5K chart, I'm usually looking for right around 6 ticks above the low, unless the readings still support move lower, because sometimes you'll get turnaround spikes in magenta and that even just before. Oftentimes you can play 3-4 times waiting for that eventual low to hit. But these spike ups still under any weakness situations. In this case, we've had green over cyan on the DOC, but we're meeting that right now. It's just you've got rising red. That should be some support for it. But again, that ultimate zero target right now is 34. That could rise, though, as the zero line moves up, but we'll continue to follow it. As always, though, I will keep posting details and updates on the Skype chat. We can look for your indicators to arrive a little later today, so that you'll be all set for the beginning of October. Trade well, and we will talk to you later.